Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. And markets, flip-flopping between the red and the green, though holding on to that 19,800 levels, but nothing exciting as much as we saw in the last couple of trading sessions, right?
Absolutely. Nothing exciting coming in for the benchmark indices in today's trading session. We are actually seeing a very flat trading session when it comes to the benchmark indices. Like Vinny said, flip-flopping between the green and the red. But yes, marginally actually trading flat but above the 19,800 mark. Broader markets at this point in time are holding on to positive territory, 0.3% uptick for small mid cap. Small cap index is outperforming, trading higher by above 0.7%. If you look at Nifty Bank, that's also marginally outperforming the benchmark indices. But yes, flattish move coming in on the whole when it comes to the markets. Talking about the advanced decline ratio, for now it is tilted, or rather still tilted in the favor of the gainers, but let's see how it transpires. More 2 hours left for the trading session to come to an end. Talking about the sectoral indices, then definitely all eyes is on the IT sector, and that is indeed the top sectoral loser in today's trading session post TCS's numbers. Remember, this evening we are awaiting numbers from Infosys as well as HCL Tech, and both of these tech majors will be reporting their numbers only post market hours. So yes, it's going to be an earnings heavy or IT heavy day for us. But talking about the gainers then is the media index and auto index that are holding on to gains at this point in time, Vinny.
Absolutely. So interesting to watch out for those IT names as well and what they end up doing post-market hours. We'll see the reaction tomorrow, but keeping an eye out on Nifty IT as well. But on that note, let's get started with those individual movers and trades. And on the technical front today, we are joined by Kunal Bothra, while from the research team, we have as well as Ashesha joining in with us. A good afternoon to all three of y'all as well. Let's talk about the first stock that is in focus, and on our list today is Sami Hotels. This one is a newly listed company, and when you look at it, they have reported the Q1 FY24 numbers because they just listed a couple of this month itself as well, when you look at it in the month of September. Now when you look at the numbers that have come in and look at the dip that you saw at the starting at the get-go, it was trading a bit in the red as well and then recovered from there on. Revenues of the company have seen a growth of around 12% on a year-on-year basis, coming in at 190 crores, while the company's losses also have actually seen a bit of a reduction there. Loss at 83 crores versus 100 crores last year. So yes, an improvement in terms of the losses as well, reduction in terms of the losses on that front. Margins 24% versus 35% is what the EBITDA margins have come at. Operating performance seems to be a bit weak. So that was something that was a bit jittery in terms of the starting when you look at it, but revenue surely seeing a growth, and obviously during this festive season as well as holiday season coming in, that is going to be one to watch out for how they shape up going forward in terms of Q2. As of now, okay set of numbers that have come in from Sami Hotels.
Alright, next up let's talk about PCBL, and that particular counter hit a record high level in today's trading session. Last time I checked, the stock was trading higher by in excess of about 6%. Now the stock is trading higher by about 5%, but like I mentioned, record high in today's trading session. The company was granted 2 patents by the Indian Patent Office, and the patents are related to the process to treat carbon black to use in inks and coating applications, and also surface modification of carbon black to improve fuel efficiency and a tire life. So on back of that patent that they've got, or 2 patents that they've got, the stock is pretty perked up in trade today. 5% uptick coming in as at this point in time, but let's not forget record high levels coming in for PCBL.
Record high levels for PCBL. But let's move on and talk about Gail then on the technical front. And Kunal, Gail at the current levels, what is the view on this one? Last 6 months we have managed to see around a 40% return coming in already. Are you expecting more upside?
Yeah, so I think it's been an interesting PSU so far. The stock has not yet hit a lifetime high. It's a few points away from hitting a lifetime high levels. But then the long-term charts, and especially the yearly charts, are something interesting. The stock on a YTD basis is up some 32% odd so far. It's now on the verge of a breakout on the charts, and more importantly, the indicators on the longer-term basis have already confirmed a breakout, which means it could be a matter of time that Gail can also provide that much needed in a breakout for itself. 130 approximately is that mark for Gail. My sense is that looking at the historical context of many of the other PSU stocks, and from the time many of these stocks when they've given breakout of 52-week highs as well as life highs, these stocks have risen up by anywhere in the margin of 10 to 15% on a very short-term time scale. So I'm expecting the same for Gail. Above 130 levels, would expect at least a 10 to 15% upside over the very near term.
All right, so that's a view coming in on Gail. But Shesha, let's talk about United Breweries and why is this particular counter in focus today?
Yes, it is on the back of an initiating coverage note that is coming from Nuvama. They've initiated coverage with a buy rating and a target price of 1935. The stock currently trades at 1600 odd levels, so they're betting on about 21% upside from the current market price. They say appointment of the new MD and CEO is a positive for the stock. Company is now on the recovery path. They say state-specific issues are now easing out. India's alcohol beverage market is amongst the biggest and is growing fastest globally. They expect gross margins to improve gradually in FY24 for the remaining part of FY24 and in FY25 as well. And they say that key raw material prices like barley are now easing out. So positive commentary that has come in this initiating coverage note from Nuvama. 1935 is the target they've given. The stock currently trades at 1600. It is holding up with gains of nearly 1.5% on the back of this report.
Okay, that's on the back of a report, but obviously the India and UKFDA, that's been in the work for the longest period of time, and now it's expected that finally we will see this agreement signed soon, and now that benefits a lot of alcohol beverage companies as well. So today we did have a discussion with Karan Torani, Senior Vice President at Elara Securities, as well as Neeta Kapoor, CEO at International Spirits and Wine Association of India, to talk about the impact of this agreement. Listen in.
With respect to the UKFDA, the major benefit is going to be on account of the bulk that is imported into the country. As the bulk imports into the country, you will see that all the Indian players will have a major cost benefit because the duty would be rationalized, hopefully, on the bulk also. Second is the consumers will get a lot more choices because you will have the finished product coming in even from smaller distilleries based in UK. So that means that there will be more choices for the consumers here.
UKFDA will broadly lead to revenue growth upgrade of somewhere close to 8 to 12%, because it will have a positive impact in terms of volumes by not more than 2.5%, but your realization per case will see a bigger delta in terms of positive impact. So I think you could see an upgrade of 10 to 12% in terms of revenue, which will flow down to your earnings. But the problem here is, if you look at their BII and BIO portfolio, that is capped at a margin of about 10 odd %, and which may not lead to a multiplier effect in terms of your potential EBITDA. So I think in terms of earnings, it's more of a mild, flattish or a muted kind of an impact.
All right, moving on. Ankita, let's talk about pharma major Lupin and why is this particular stock in focus today?
That's correct. Lupin is in focus today. In fact, if you look at the share price, it is up almost 2% in trade right now. It is on the back of the fact that the manufacturing facility of Invagen Pharmaceuticals Inc., which is a wholly owned subsidiary of Lupin, which is situated in Long Island, New York, USA, has notified that the company has received the EIR, or the Establishment Inspection Report, from the US FDA. And on the back of this news flow, we are seeing an uptick of almost 2% coming in for the stock.
Okay, that's the view coming in on Lupin and the news flow around Lupin as well. But let's move on and talk about IOC then. Kunal, what is the view on IOC? What is the target that you are keeping on IOC now? How are you seeing the up move? This year we've seen almost 18% return for IOC. What is the upside?
So on the short-term charts, the stock is actually struggling. So from 100 rupees, the stock had fallen down to 87, 88 levels on the very recent charts, and I'm talking of it from the July and August start close for highs for IOC when the stock was at 100 plus levels. Now there are two things which have happened for the stock on the short-term charts. One, of course, is that the indicators have come back into an oversold territory, so that could be a strong indication that maybe 87, 88 could be a new base for the stock over the near-term basis. And the second, the most important point is from the September highs when the stock was at 95 or 96, a downward sloping trend line which was acting as a resistance, that has been broken today, and the stock is now inching above the 90 plus mark. So this could also be an indication that it's not just that the prices have stabilized at current levels, 87, 88 acting as a support, but there is also a possibility that a downtrend could have reversed for the stock, and I think that could be a positive for many of these OMC names, including IOC.
Downtrend maybe has reversed for the stocks and these OMCs, so keeping an eye out on IOC over there and these levels over there as well. Let's move on, talk about Kintech. Why is this one in focus today? Because because we have a note that has come in from Jefferies. They're maintaining a buy on Kintech, given actually hiked the target price to 560 rupees per share from previous target price of 500 rupees per share. What they're saying that, the company is targeting this global markets in and Asia as well as the West. So that is going to be something that, overall the markets that they're targeting, that could see a growth. They're expecting a steady growth coming in the India business, mainly led by the AIF accounts. And overall, the account aggregator business is also expected to see an expansion there, and products that will suit furthermore in terms of the growth of the business as well. So overall, yes, faster growing, they're growing faster than the peers in India as well as the global platforms when you compare as well. And that is why Jefferies is positive on Kintech, given a target price of 560 rupees per share.
Alright, let's shift focus to Aster DM then, and that particular counter is pretty much perked up in today's trading session. Last time I checked the price for Aster DM, it was trading higher by about 9.6%, which meant that was the biggest intraday gain coming in since July 4th for the company. Now it's given up some of those gains, but nevertheless holding on to strong gains of about 5.7%. Private equity firms like BPA, EQT and Ontario Teachers Pension Fund Board have mulling acquiring Aster DM's assets, including the India business as well. This is source-based information that was put out by wire agencies. However, you did not have any of those players actually comment on that particular story, but the fact that you have a lot of PE players that are actually viewing Aster DM's businesses, especially the India business as well. You can see the stock is pretty perked up in trade, 9% on an intraday basis, 5.7% right now as we speak.
Absolutely, that's Aster DM for y'all, keeping an eye out on that one. Let's move on and actually talk about MRPL then, Kunal. And MRPL last 6 months, what returns it's already given? Should one actually look at start booking profits now for MRPL or continue to hold this?
I would suggest to continue to hold on to the stock. It's trading at 100 plus levels right now. In fact, very recently the stock had managed to bounce back from its 50-day moving average. I think closer to 96 odd levels is where I'd recommended MRPL for the second time on a trot, expecting the stock to break past about not just the 100 levels, but eventually go into that 110, 114 range. So my sense is that this could be a good zone to buy MRPL in case if the stock drops back again to that 50-day moving average. That could be another zone to try and average out further. 110 to 114 could be a near-term target range for the stock. That's MRPL.
Okay, staying with the oil and gas space, then Ashesha, why is BPCL in focus today?
Yes, this is on the back of a note that has come in. The stock, in fact, is holding up with gains of nearly 2% as we speak. Citi has come out with a note. They are maintaining their buy stance on the stock. They've given a target price of 445. They're talking about two catalysts which could aid near-term momentum for the stock from here on. First, they say that second quarter earnings performance is expected to be strong, and it will cement expectations for healthy interim dividends in the second half of the year. They've also spoken about global crude oil prices, where they say that crude oil prices are now down nearly $7 per barrel from their September 2023 highs, and gasoline and diesel prices too have cooled off by nearly $9 to $12 per barrel. As far as domestic crude oil prices are concerned, they believe that prices are not expected to rise, at least in the near term, given that we have several state elections in the coming months. And these factors, and with decline in global crude oil prices, they believe these factors sharply improve spot integrated margins for oil marketing companies. So, positive report that is coming from Citi for BPCL. They are maintaining their buy stance. 445 is the target that they've given, and the stock is holding up with gains of nearly 2%.
Okay, let's move on to the next one, and coming back to the pharma space. And Ankita, you picked up Aurobindo Pharma as well, seeing a good up move in trade today as well. What is the reason for this up move?
Right, Vinny, Aurobindo Pharma is seeing an uptick of almost 2.5% in trade, up 2% right now. It is on the back of the fact that, further to the disclosure letter that they had given out on the 1st of September 2022, informing about the expansion of biologics manufacturing facility and exploring the possibility to enter into a contract manufacturing operations for biologicals. They have informed the exchanges that, that the Cura Tech Biologics Private Limited, which is a wholly owned subsidiary of the company, along with its subsidiaries, has been in discussions with Merck Sharp and Dohim Singapore Trading Private Equity and its affiliates for the CMO operations. And in this regard, the two parties have also signed a letter of intent. Now the parties, the parties under the said LOI intend to conclude the negotiations by March 31st, 2024. And on the back of this news flow, we are seeing an uptick of 2% coming in for Aurobindo Pharma.
All right, moving on, let's talk about PVR Inox then, Kunal. It's just Thursday and we're already talking about PVR Inox. Do you think that you should position yourself well, given the Friday is coming and also you will have a weekend also?
Yeah, let's hope so. And I think interestingly for PVR Inox, the charts are actually indicative that there's a major correction which could probably have ended for the stock price. Over the last 1 or 2 months, specifically from the Augustan highs, the stock was at 1850 levels, went down to as much as I think 1670, 1675 mark, which is almost like a 10% correction completed for the stock. And now you're seeing the stock bouncing back again. So net in the last 5-6 days, we've seen that the stock has been meandering at the 50-day moving average. It went down for a couple of days, but then now it's risen back above the 50 DMA. This, I believe, could be a strong case of a possible breakout as well as a turnaround for PVR Inox. And I also believe that the stock has completed a major retracement after rallying from 1350 to 1850 and then corrected from that levels to 1680 odd mark. So that's also another reason to look at the stock, expecting the stock to gradually move up higher and break past about the previous highs of 1850.
Okay, gradually move higher and cross this previous highs as well. That's the word coming in on PVR Inox from Kunal. But let's move on, talk about Zomato. It's back here. And 2 brokerage notes that we are going to be talking about. One is from Kotak Securities, other one is from ICICI Securities. Let's talk about Kotak first. They're retaining their buy. They've revised the target price to 125 rupees per share. They believe that overall the food delivery business and that the gross merchandise value growth that in terms of the weakness that has bottomed out, and now we could expect better moves coming in the gross merchandise value for the food delivery business as well. So yes, from the second half of this year we could start seeing an improvement there. Other than that, the higher platform fee, restaurant commission may keep the take rate at those stable levels. That will not impact the business then. And obviously, they're expecting the Blinkit as well as Hyperpure losses to actually start seeing a decline progressively. Operating leverage mainly will be driven by the improvement in terms of the margins in the food delivery business and obviously the losses that will be curtailed in Hyperpure as well as the Blinkit business. Now, ICICI Securities too giving a thumbs up to Zomato, hiked the target price to 160 rupees per share from previous 120 rupees per share. They believe that Zomato will be able to achieve those adjusted EBITDA guidances that they've given of 4 to 5% by Q3 FY24 as early as that. So that's next quarter. Quick commerce business will start seeing improvement in terms of profitability as early as Q1 FY25 as well. And similarly, they also believe that Hyperpure's losses will start seeing a reduction as well and an improvement in terms of the profitability front over there for these businesses. So thumbs up coming in from both the brokerage notes on Zomato.
Not only brokerage notes or brokerages, a lot of analysts also now backing Zomato and the likes of other new age tech companies. We spoke to Ajay Srivastava of Dimensions Corporate Finance Services and he spoke about Zomato and especially the QSR space. Let's find out what makes him also bullish on this space.
Upper tier India, travel, hotels. Okay, you need to take planes to fly. 2 companies who do the whole work for India. Beautiful setup. You need a delivery company. One is listed, one is not listed. Now, how much brains do you need to actually do investment in that kind of company? And guess what? And it's, what the amazing part is, people looking at delivery. But if you go down the business model, the advertising has become a big business model. The delivery will become, in 3 years' time, delivery will become very small part of the revenue. Advertising will become biggest part of the revenue because not many people know this, that when you subscribe to these services, the kind of discounts you get on hotel is outrageous. You pay 150 quarterly subscription, you go to 5-star hotel, you get a $9,000 discount. That whole model of subscribing to their services and advertising on their platform, I think will far exceed on the delivery what is happening there. So I think it's a great story. For India, it's just started. People who, yeah, sure, if the price was 50 rupees, now it's 100 rupees, so you may feel cheated, you left out. But don't look at this way. Look at the fact that 5 years down the line, what are these companies going to look like? Mega money-making machines these companies are. So absolutely correct. Aviation, and not for short-term, long-term, hotels continue to good story. Food deliveries, yes. QSR, I'm not very confident because so much competition in QSR today. You walk into a mall, there's some 40 outlets all churning out, rubber and kind of cardboard sounding burgers or tasting burgers. So I'm not so sure about QSR, but I'm certainly sure of home delivery companies. I think do a better job for your portfolio.
Right, let's shift focus. Let's talk about Shila Medicare. Then, and that particular counter has seen an uptick of as much as 6%. Last time that I checked, it was the biggest percentage gain coming into the counter in over a month. Now it's subdued a bit, 2.7% uptick. Nevertheless, the company has received an approval from Ministry of Ayush for the sale of oral spray to treat mucositis. The oral spray will be made available for the first time in India under the brand name Oral, and on back of that particular approval coming in, you can see the stock actually perked up in trade. Nevertheless, holding on to 2.7% uptick. One time, let's not forget, Shila Medicare was trading higher by about 6% or so.
Okay, surely keeping an eye out on that one. Let's move on, and Kunal, on the charts, Aditya Birla Sun Life AMC. What's the review on this one? What is the target that you're keeping now?
Yeah, so I think it's a fresh breakout for Aditya Birla Sun Life AMC. The stock has crossed 447 mark, which makes the stock at a 7 or 8 month swing high. It's also now looking attractive because in terms of indicators, the stock, especially on the RSI, has given a breakout on the weekly charts, trading at this 440 plus levels. Looks as an attractive setup and more of a consistent chart rather than a very high beta kind of a stock. Gradually over the last 5-6 months from the lows of 320, the stock has been a more of a gradual mover, making a pattern of higher highs and higher lows. And I think that's the outstanding feature for the stock over the near to medium term, expecting more upside as well as the consistency of this uptrend to sustain for the stock.
All right, expecting more upside for Aditya Birla Sun Life AMC, but let's take a look at what did HDFC AMC do in the quarter gone by. As you can see, the flashes are on the bottom of your screen. You have the consolidated revenues that have come in a tad bit higher on a year-on-year basis, coming in at around 643 crore rupees as against 545 crore rupees a year ago. That's HDFC AMC for you. Also, if you look at the PAT number, it's coming at around 437 crore rupees as against 364 crore rupees a year ago. So on a year-on-year basis, if you look at the company, the stock, actually they have posted a tad bit higher numbers in this quarter, but we wait for some more details to come in for HDFC AMC. I'll just ask my producer to refresh the screen when it comes to HDFC AMC stock price, because right now the stock is trading a tad bit lower, trading flat with a negative bias as we speak.
Trading a bit flattish as of now. We'll wait for more details for HDFC AMC, but as of now seems like in terms of revenues as well as profits, tad bit higher on that front. But let's move on and shift focus to the mining companies today, because they have been in focus. All of them are buzzing in trade. And Ashesha, why is that so?
Well, yes, all three mining companies, NMDC, GMDC, MOIL, are gaining anywhere between 5.5% to 8.5% today, and this is on the back of an important development that came in yesterday. Council has approved royalty rates for 3 essential minerals, lithium, niobium and rare earth elements. Royalty rate has now been approved, and the government had earlier this year in the month of July removed 6 essential elements from the list of atomic minerals, which means private companies can now bid. Commercialization of mining is now being promoted and encouraged, and that is the reason all of these counters are in focus today. Council has approved the rate of 3% for rare earth elements and 1% for the other 2 lithium elements. So on the back of this important update that has come in, all of these mining stocks are in focus today. As you can see on your screens, all of them gaining anywhere between 5.5% to 10% as we speak.
So all of the mining stocks are actually mining in good gains in today's trading session. But let's even add to that list NMDC on the charts. Kunal, how is this one looking to you? Do you think that this is going to be a gold mine for people if they invest right now?
Well, I'm not sure of that, but at least on the charts, the stock is looking attractive. In fact, NMDC is something which I had specifically highlighted a couple of days back when the stock was trying to come out of its consolidation, which has been going on since the last few weeks for NMDC. The stock was almost at 146-47 odd mark. Now it's closer to that 160 levels. Again, looks attractive as a setup, and my sense is that this could probably be a more of a consistent stock in terms of the short-term gains. My earlier targets were closer to 160. Those have been met for NMDC, and I think on the short-term charts now, I would look out for 170 to 175 as a target range for NMDC.
Keep an eye out on that range for NMDC over there. But let's move on, talk about TCS that reported its numbers as well. Ankita, not that great, but what are the internals coming in for the numbers?
That's correct, Winnie. If you look at the TCS numbers, it was a beat on the margin and PAT, but there was a clear miss on the top line. Net, no expecting much change in the estimates. In fact, if you look at it, the Q3 will be seasonally weak, but that street has already written off FY24 in any case. But given the strong order booking and margin resilience, FY24 outlook still remains good for the company. However, if you look at the buyback news, that was the one that was most watched out for. Buyback worth 17,000 crores will be taking place, and at 4,150 rupees per share. And this came in lower than what the street was penciling in. And on the back of that, we can see a tick of more than 1.5% coming in on TCS.
Absolutely, that's TCS with the earnings and the buyback announcement. The buyback quantum and price is a decision of the board, is the word coming in from TCS's CFO, and he also spoke and he also mentioned the fact that the company wishes to return the major cash flows to the shareholders. What else did he say in that special interaction with ET? Now listening.
I think overall that's a board decision in terms of the quantum and the price. If you look at it, as you rightly called out, our focus is to give substantial free cash flows back to our shareholders as our capital allocation policy, and we are sticking around to that.
But are you keeping some powder dry for some acquisitions, etc. as well? I know TCS hasn't been very aggressive when it comes to large acquisitions, but given the market position right now, there might be some consolidation opportunities coming your way. Is that something which is getting incrementally more attractive?
So capital allocations are post free cash flows. That is after all decisions on investments required, wherever it is. And if you look at it right now also, we have 60,000 crores, almost 59,000 on our balance sheet. So we have sufficient cash and a war chest available for needs that may have come.
Okay, on that note, viewers, we're going to slip into a very short break, but don't go anywhere, because after this break, we'll be continuing with more stocks that are in focus as well.